Welcome back, everyone. Presenting our next company, we have Brazil Minerals, Inc. It trades on the OTCQB under the symbol BMIX and is an exploration company with 2 hard rock lithium projects, as well as projects in other highly strategic minerals such as rare earths, titanium, nickel, and cobalt. Please welcome its CEO, Marc Fogassa, and Brian Bernier, VP of Corporate Development and Investor Relations. Welcome, gentlemen.
Thank you. Thank you very much. Thanks for inviting us, and thanks for attending. It's a pleasure to be here today. Let's go to the slide in which we'll spend some time. This is a quite important slide. It sort of summarizes Brazil Minerals. Brazil Minerals is an OTCQB traded company, as mentioned. We're very proud to have accomplished 2 significant milestones this first semester. One of which was the elimination of all variable rate convertible debt in the company, also known as toxic debt. So we have none of that left, as well as uplisting to OTCQB, which was something that happened recently. Brazil Minerals is composed of really 2 components. One is 100% ownership of strategic mineral projects in lithium, rare earths, titanium, nickel, cobalt. We also have areas of alluvial gold and diamond, as well as industrial sand. And in addition to that, we own partial ownerships in 2 companies as of today, perhaps more in the future, but 2 companies. One is focused in gold, Jupiter Gold, which also trades in OTCQB. And the other one is Apollo Resources, which is a pre-IPO company focused on iron. And I think people that follow us appreciate our commitment to strategic minerals. We'll be talking about lithium in this presentation. But it is quite important to note the importance of the ownership in these 2 subsidiaries, since both of them are expected to be opening mines within the next 6 months in the case of Jupiter Gold, and 18 months in the case of Apollo Resources. Jupiter Gold is going to be opening a quartzite mine. It is a quite profitable mineral that's used for tiling and kitchen countertops. And we expect it to be profitable from the beginning, and Brazil Minerals would be benefiting from a dividend coming from Jupiter. Apollo Resources will also have a profitable iron mine coming up, and we'll discuss iron in much more detail in this presentation. And we expect a sizable dividend check from Apollo Resources. And I think to be able to appreciate the benefit of that as a shareholder, it suffices to say that our thinking internally is that this 2 mines, nothing else happening, could make Brazil Minerals profitable already. And all things considered, we are considering very, very strongly taking at least half of the cash flow from such dividends and buying back Brazil Minerals stock. So those are things that we're thinking about, and that's why it's quite important to have the structure that we have. Which is a very different structure than the structures that you see for other companies pursuing mineral exploration in Brazil. Okay. Next slide is one that details what we have in terms of strategic minerals. We are in all needed minerals for the green energy revolution, which is essentially most exemplified by electric vehicles, EVs, for which you definitely need lithium, but rare earths are also a component of magnets. Titanium is used in all sorts of alloys, and clearly nickel and cobalt as well. So Brazil is blessed with strong geology, and Brazil Minerals is in all these essential minerals. And the next slide it's a hard to read the slide, and I apologize. It is the map of Brazil. Brazil, as you know, is a country in South America the size of continental US. So it's a very large country. It is where I was born. I speak Portuguese fluently. And Brazil is blessed, again, as I said, with terrific geology. We are located with most of our projects as of today in a state called Minas Gerais, which is the center state in this map by the two letters MG. Minas Gerais means general mines in English, which gives you a sense of the strength of minerals for that part of Brazil. The Portuguese identified gold and diamond 200 years ago, and now we have lithium, we have niobium, you have all sorts of things in that state. And that's where we have most of our projects. More recently, we have migrated to identifying extremely interesting projects in the northeastern part of Brazil, which is a new frontier, as well as on the western side of Brazil. Okay, and we'll go into some more details about some of these projects. The next slide is some of the key team members. I am somebody who comes from the finance background. After double majoring from MIT, I pursued a Harvard MBA, and then spent 8 years of my life in U.S. venture capital, where I was fortunate to help companies go from PowerPoint to $1 billion NASDAQ valuation, in one case in particular, where I actively, at age 31, took a board seat, raised $2 million from my venture fund into that company, brought Schroders and Advent for another $2 million each at a very reasonable initial valuation. It was almost out of a garage, again, a PowerPoint presentation. Fast forward a few years, NASDAQ traded for over $1 billion. And after doing that for a number of years and becoming actually a generalist, doing that in many industries in the U.S., I decided that I was getting old enough and not having enough fun in terms of doing it myself. So the goal for myself is really to be able to take something like what we have today into the $1 billion realm for valuation. And it's been a fantastic ride, and I wouldn't be able to be here today if it wasn't for the excellent people I put around the company, including Orlando Rocha, which is our expert iron geologist. He has over 20 years of experience. He's a premier geologist for the small, mid-size iron miners in Brazil. He oversaw all the work in drilling for our Piracy Caba project, which will be our first iron mine. And he's currently writing our NI 43-101 for that project as well. We're also very fortunate to have Ari Lee, who's our VP Mineral Exploration. He essentially knows all minerals that exist in Brazil. He is currently in the field doing extensive exploration work in northeastern Brazil for us. And the combination of Orlando and Ari Lee has been nothing short of fantastic. I do have an extremely strong lithium geologist as well as a whole lithium team. I am not actually putting his name up because I don't want to invite competition to try to take him away from me. It is a competitive arena, and we are blessed to have somebody who's worked in producing our lithium companies. And so suffice it to say, we're well served in lithium, even though that person is not here. And Joel is an addition of the team from last year. He's a lawyer who's I've known for close to 6 years. He did a lot of contract law for us before. Incredibly bright young person, and really, when you deal with the situations in Brazil that entail interface with regulators, interface with landowners, service providers, there's nothing better than to have an expert lawyer on your staff. And Joel and I, we talk 5, 7, 10 times a day, and it's been an incredible pleasure to see him grow into a terrific VP operations for us in Brazil. And then I'll let Brian introduce himself. It's been a pleasure working with Brian for several years, but Brian, go ahead.
Yes, hi, thank you so much. I have a 36 years experience in the private placement, private equity arena, excuse me, and working very closely with high net worth individuals, family offices, boutique private equity firms. And I've known Marc for going on 5 years now, but made a decision to resign from the investment banking firm I was with 2 years ago and joined 2.5 in the fall of 2019. So my focus is to continue to identify capital sources to advance all of the projects, not only Brazil Minerals and the lithium projects, but also Jupiter Gold projects and the Apollo projects. So it's been going very well.
Thanks, Brian. It's been a pleasure working with you. And we have clearly a number of consultants in very specialized fields providing support to us. We tend to have frugality in what we do. Again, it comes from my experience in venture capital, where sometimes less is more. And so we have, again, a focused number of core members. And then we have a best of breed for all sorts of technical areas for which we need help. On the board of directors, you have myself as well as Ambassador Roger Noriega as an independent director. Roger, I've known for over 10 years, nominated by President George Bush to become the Assistant Secretary of State. He originally worked with Colin Powell and later Condoleezza Rice. And for that post, he was unanimously confirmed by the U.S. Senate. I very rarely have seen anything unanimously done by the U.S. Senate. So that was the case with his nomination. And prior to that, he was ambassador representing the U.S. in the Organization of American States. In that capacity, he has met every politician in Latin America that you can imagine. Has terrific network. We have not needed his network in Brazil. We have a terrific network ourselves. But as we expand now in conversations with multinational firms, I think we're going to be utilizing his global network a lot more. And then on the next slide, I'll begin talking a bit about lithium. And then I want to make clear one thing. We are finalizing an agreement, with an NDA type agreement with a player that will prevent me from really going into a lot more detail here. So I will, I think, describe enough to make everybody comfortable. But we are essentially under an NDA. So for lithium, we have 43 mineral rights located in the Minas Gerais state in central Brazil, close to Companhia Brasileira de Lítio, CBL, which is an icon in lithium in Brazil. They've been producing for a number of years. And we're also close to Sigma Lithium, which is clearly a fantastic story on its own. We're very fortunate to have areas that have the lithium-containing minerals, and we are advancing them. And we'll talk more about that in a second. What differentiates us from others, perhaps, is that we have a second project in the northeastern part of Brazil with 7 mineral rights in the states of Rio Grande do Norte and Paraíba. So lithium almost, requires no introduction in this day and age, but these slides are a bit dated, probably about a year ago. It hasn't gotten any easier for lithium in terms of supply. And so they're still valid. UBS thinks that the EV share will grow to about 40% by the year 2030. And by the year 2030, EVs will need an equivalent of 225 billion iPhone 11 batteries. That's a lot of lithium needed. And so that market is not going back. The genie is not going back in the bottle here. The next slide is, it also is another representation of what people think lithium will need to do. And it is expected by experts that by 2025, lithium demand will most likely outgrow the known supply from lithium projects. And again, I go back to repeating myself a little bit that lithium, nickel, and cobalt are typical standard EV battery metals. We have projects in all three of them, but we also have rare earths and titanium, which are used for magnets and special alloys that go into almost every component that is associated with anything green energy. For lithium, our first project, which is in Minas Gerais, entails 39 mineral rights. So we have a very extensive footprint of over 57,000 acres. And the areas are characterized by having pegmatites. Pegmatites are geological formations which may contain semi-precious stones, but they also contain minerals which have lithium as component. And one of them is spodumene. And you see in the next slide, one of our geologists, one of our junior geologists, standing next to a spodumene crystal, incredibly large, essentially within a cave that continues on to our mineral right. And that's exactly where we are trenching as we speak, to be followed by drilling. And that will naturally lead, we believe, to an I-43-101 That area has several other targets. We announced on a press release a few days ago that we felt it would be very cost effective for us to have our own drill. So we bought a small drill. We're actually getting it to site as we speak, so that we can then go through 20, 30 targets at a much lower cost than spending the amount of money needed to be doing big drilling, which we will do undoubtedly, because that's what we need to identify the size of reserve, get the numbers to underscore where we're going to have production started, etc. for spodumene. But we in our way of thinking, which is combines the capital markets in the U.S. with the creativity of the Brazilian way of doing things with perhaps less capital. So we're using pages from the Brazilian book here. We got our own machines to be able to do the attacking of targets at a much lower cost. So lithium is, again, we have full covers on the ground today on this area, and then we have another team in Northeastern Brazil as we speak. So we have 2 lithium teams as we speak. And then the lithium project in the northeastern part of Brazil is quite exciting. It's still early, but very promising. 22,000 acres in the states of Rio Grande do Norte and Paraíba. So I will veer off now to a mineral that doesn't really get talked about, and I don't really understand why, because it's equally exciting to lithium and incredibly profitable, which is iron. So going back to the first slide of the presentation, we have an iron-focused subsidiary called Apollo. Apollo will be coming out public next year. Brazil Minerals owns 60% of Apollo. We're going to maintain a very large ownership. That's our goal here for Apollo. Brazil happens to be a terrific jurisdiction for iron. It is the second biggest producer in the world, and iron prices have reached a 6-year high about a month ago. Our initial iron mine will be located next to a producing mine from Vale. Vale, as you know, is a very large global mining giant, 115 billion market cap company. By the way, they doubled their market cap in the last 12 months or so. So that gives you a sense that some people do pay attention to iron. Our project is located in the world-famous Iron Quadrangle area. Open pit, simple operations. There's 2 types of revenue potential here. We'll detail that. The simple basic case, which is to do no processing and sell as is, and then to process it ourselves and sell higher level, higher grade iron. In any case, we expect to be operational by fourth quarter 2022. In order to create a situation that was interesting to Brazil Minerals and to further our goal of having Apollo become a very large company and very fruitful in providing cash flow back to motherland, Brazil Minerals, we have been very fortunate to add other projects to the fold, totaling now 57,000 acres of very credible iron projects. So think of it as almost like a biotech company that has one drug in phase 3, and it has maybe a drug in phase 2 and several extremely interesting phase 1 drugs. That's how we should see this. So jump to the next slide. This is the chart of the iron prices. This is iron through COVID. If you have 62% grade of iron in China today for sale, you're getting $217 per ton. So save that number. Brazil, as you see from the top in yellow, produces or sells about $20 billion worth of iron ore annually. We're second to Australia. Australia and China have their differences, and so that translated to Brazil being even a more sought-after jurisdiction for iron purchases. And I'm getting calls from intermediaries asking for iron for Chinese ships. We don't have that yet, but that gives you a sense as to how interesting this market is. Pictorially, in the next slide, we show where the 6 iron projects that we have are located. Again, MG for Minas Gerais is where we have 4 projects. 3 of them are bunched up in the Iron Quadrangle area for a reason. And then we have a project in the northeastern part of Brazil and one on the western side. And the next slide is one that details a bit more on each one of the projects. So in blue is Rio Piracy Caba, or RP, our first mine, which again, we're anticipating to be able to begin late next year. We have finished all drilling a couple of weeks ago. We have an estimated initial number of 10 million tons of iron ore, imminently sellable, and environmental studies are progressing well. It's a big deal in Brazil to do them. We hired top-of-the-line consulting firms to help us with that, and everything is going is quite well. And that timeline to initial operation is purely what it takes to license a mine. We are maximizing all that we could do on that. Believe it or not, there is really nothing else. It's just the timeline of the environmental department to analyze the paperwork. Okay. Then we have two other projects in the Iron Quadrangle, which are number 2 and 3 here. Barão de Cocais is where we're going to go next. It's a fantastic area, 62% iron grade. And then we have Itabira with a little less sampling at 53%. But again, if we have a facility, which we plan to do, to process iron to a higher concentration that could service all three projects, then we're in really excellent shape. And then fourth on the list here is Alagoas, which is a very large area that we have 100% ownership of in Alagoas, which is a new mining frontier. We're next door to Appian, areas owned by Appian. Appian is a large mining fund. They apparently invested $40 million purchasing that project, and they're building a massively big copper mine. We have not done enough work in our areas to know if we have copper. We know some of our areas are definitely next door to Appian's, but I think it's premature to say. But there have been historical indications of iron throughout that property, the property that we have in Alagoas. The Minas Norte is another large project that we have, very exciting frontier for iron in northern Minas Gerais. We haven't done enough work here. We have, again, every area that we have pretty much has had artisanal mining of some sort indicating iron, or it's located next to well-known mining sites. In Mato Grosso do Sul, the same thing, which is a new frontier. Some miners have found iron at 50-60%. We're right in the crux of things there in that new frontier. So I'll talk more about Piracy Caba, which is depicted in yellow here as part of the three projects in the Iron Quadrangle. And in red, that's where we did our drilling. That's the part of our mineral right, which is bigger than the red, but that's the part that we are focused on. And our open pit iron mine will be in sort of in the center of the red triangle on this photograph. To the left, you see the incredibly large Vale iron mine. And then to the right, you see the city. And so you have power, you have water, you have all the services needed to run a mining operation. Before we acquired this iron project, we clearly, this is in the thick of COVID. A lot of companies were, not doing much, but we were incredibly active. We sampled the area with our own personnel. And SGS Geosol, the laboratory depicted here, that's their certificate, which I put in the slides verbatim, is one of the premier labs in Brazil where all the major firms send their samples. The results came back nothing short of a spectacular. 68% iron is a very, very large result. So based on that, we decided to go ahead and acquire this project, which we did in November 2020. Again, the thick of COVID, we were doing that, and let's skip to the third bullet on this slide. The price we paid was 5 million real, which is at that time was $925,000. Payable installments. I love this type of transaction in Brazil where you pay installments. That's something we do very, very frequently. We've paid a part of it. We've gotten the title transferred to Apollo Resources, which is the Brazil Mineral Sub, so there is no title transfer worry. And then there are two small payments left, one this year, December 2021, and another one, December 2022. As mentioned before, we finalized the drilling campaign successfully with 11 drill holes, quite a small closed mesh, so we will have measured resources in our NI 43101, as well as 15 deep trenches. We're doing all sorts of mineralogical studies right now to identify how we could process that to even higher levels for sale. But it is eminently sellable while we have 10 million tons of iron ore in the first identified and measured part of the project, right? And as we mentioned, environmental studies have started, which are needed for the licensing. Again, another step back to educate the U.S. investor on why iron is interesting. So the bottom part of the slide is from a year ago. So the numbers would only look better. BHP, Fortescue, Rio Tinto, and Vale are companies that are public traded. Fortescue is a pure play in iron. And the numbers are unbelievably attractive. They're software numbers, right? Software margins. And we know from talking to local miners that these are eminently doable, if not better, when you have a small or mid-sized iron operation in Brazil. So that's what we're aiming to do. And by having a public traded subsidiary in iron, we intend to be able to acquire the resource to open multiple mines. And you saw the list of projects. It's a very large list as we speak, and we get new projects frequently, which also means that if we have the stock as currency, we can do accretive acquisitions. Next slide is a photo of the drilling, photo of the cores. I'm running out of time, so I'm going to go a little faster because this slide is pivotal. If we take the iron from our open pit and we process it, then we can get iron closer to 62% sinter feed to be able to sell to an intermediary, to be able to send it to China or any other market. And the numbers for iron when you process your owned ore and sell the processed iron are extremely attractive, as you see from the numbers here. So, clearly the iron ore subsidiary would be profitable immediately upon these numbers, and Brazil Minerals would get a nice dividend check. You may ask me, well, what if we don't want to do the beneficiation ourselves? We just want to sell the raw iron. Well, today, that would be $10 per ton. So we can mine initially with a guia de utilização, which is the initial mining license, 300,000 tons per year. 300,000 tons times $10 per ton is $3 million of revenue. So that's the base case. It's sort of the quote-unquote worst-case scenario for us today for this project is a $3 million revenue rate at a 60+% margin, right? That makes Apollo profitable. That really helps Brazil Minerals. If we take a $5 million bank credit and build a plant ourselves, then these numbers are the ones you see on top. So that's what we think is where we want to go. And again, it doesn't have to be dilutive, as I mentioned. A lot of Brazilian banks are more than willing to do the lending for you to buy the $5 million necessary machinery, which are magnet concentrators essentially. We plan to use no water, and no dam, nothing like that. So it'd be magnetic separation that we're talking about here. I am almost out of time, I believe. So maybe I'll stop here and let any questions come to the surface.
Well, Marc and Brian, we have tons of questions for you, but we are out of time. So would you guys join us again for another conference?
I liked it, so I'll do it again.
Absolutely.
Yes. Please do come back because the viewers have lots of questions for you, which we will send to you so you can answer them directly on your own time. But it's a great sector and people are really interested. So just come back and come back longer next time. But we do have to transition to our next presenter.
Thank you very much.
All right. Thank you both so very much. And everyone hang tight. We're coming right back.
Thank you, everyone.